loan is less than $10,000, then no tax update. Capital gains only come into play if it is a capital asset. One Bitcoin is worth $39,984.70 in US dollars. Ask Roger. Hey guys, I'm Roger Herring. I'm the Investor's Accountant, and thank you for coming by our YouTube channel. Before you leave today, be sure you hit subscribe and click the bell. That way you won't miss any of our free educational videos. Hey guys, I'm Roger Herring. I am the Investor's Accountant, and welcome to another edition of Ask Roger. This is where you get to ask me a question about business tax, real estate taxes, growing wealth tax-free. We love these topics, love to talk about them. Today, I'm going to talk with you about a great way that a business owner can knock your taxes right on down. It's called the Augusta Rule. I'm asked about this all the time. So let's just kind of peel back the onion and talk about what happens with it. So where'd it come from? The Augusta Rule is section 288 of the tax code. And what it does is it allows you to rent your primary residence or your second home for up to 14 days every year, completely tax-free. Now, it originated in Augusta, Georgia, because every spring they have the Masters golf tournament up there, and all those folks wanted to be able to rent out their homes. So they got their congressmen, they wrote to them, and their senators, and they got enough support behind it. And lo and behold, they carved out Section 288. Well, Roger, I don't want to rent my home to some stranger. You don't have to. Here's how we use it in business. You can rent for up to 14 days a year your home or your second home to your business to be used for a legitimate business purpose. And the business gets to write it off in full as a rent expense. You, on the other hand, do not have to claim the income. That's a win-win if I ever heard it. So let's go to the whiteboard and I'll tell you how I personally use the Augusta Rule. So let's get this thing fired up here. I'm gonna hit share content, go to my screen, start my broadcast. It's timing through that. And while it's doing that, let's get over here to the whiteboard. There we are. Okay, so here's the way it works. Here's how I use it. Every month in my home, and here is my home, I hold a training meeting. And I bring my professional staff, my accountants, into my home, and we do training. We sit around my dining room table, and I teach them tactics and strategies. We also watch training videos. If it's a symposium or a long seminar, like a couple of months ago, we did an 8-hour real estate seminar. We sat in my living room and we watched it on the big screen. So here's what we do. Here is my home. Here is my business. I have a rental agreement. You got to dot I's and cross T's on this, guys, because there's a lot of room for abuse. Now, this agreement, we have a fair market value rent. How do I determine that? I go out and I inquire of local venues how much it would cost me to host my meeting at their establishment. And this would include meeting space. It would include audiovisual. It would include catering. It would include supplies. I add that up, and all of a sudden I have my daily rent. Well, Roger, what if it's just me and my wife having a meeting? No problem. What you can do is go out and find out what it would cost to rent a comparable Airbnb for the day, and that becomes your daily rent. That's the way it works. So now, I hold the meeting, which has a legitimate business purpose, in my home, and I invoice the business. And the business pays me the rent. Business deducts rent. And at the end of the year, the business, here I am down here, they issue me a 1099. Well, Roger, if you got a 1099, don't you have to report it? Yep, sure do. So on my 1040, I report this on Schedule E, and I claim rent. And let's just assume the company paid me a total of 10 grand during the year. And then as an expense, I'm going to list Section 280A exemption, 10K. Net effect, zero. So I've taken $10,000 out of the company. I don't have to pay tax on it. And up here, I get to deduct it. That's a pretty good deal. I kind of like that. So now let me shut off the whiteboard and we will talk for another couple of minutes here. Stop sharing. There we go. There you are. So obviously this has a lot of room for abuse. That's why you got to dot I's and cross T's. You got to go out and you've got to get these quotes. Now, if you're my client, we have a spreadsheet that you can fill out and use as a guide for putting it together to come up with your daily rental rate. Okay. This is great. Make sure you're issuing the 1099s and you're following all the rules. Now, one other thing here. If your home is your primary place of business, you can't use this. But if your home office is merely an administrative office, you can. Well, what's the difference, Roger? Okay, you have a home-based business, you always work from home, and you never go anywhere else. That means that your home is your primary place of business, and the Augusta rule will not work for you. Okay. Second thing, what if I'm, say, a doctor and I have an office, but I do paperwork at home? Well, that means my primary place of business is where? My office, where I see patients. Okay. My home, that's my administrative office. I personally, I'm sitting in my office right now in an office center. At home, I have an administrative office, but the office center is my primary place of business. The other thing, and there's a little bit of argument back and forth about this, is can a single member LLC that reports as a Schedule C sole proprietor do this? My answer is no, because there is no difference between you and the business in the eyes of the IRS. You're a disregarded entity. So no, sole proprietorship, sorry guys, you don't qualify. Other people, partnerships, S corps, C corps, sky's the limit, guys. Hey, just make sure that you dot I's and cross T's and keep it correct. Hey, it has been great talking to you today. Can't wait for the next time. Until then, Roger out.